Hey, what's up, everybody? This is Rudy. I'm here for Bester Investor. As most of the people who follow me would know, I had a call earlier today with the Investor Relations Group at Occidental. Today is September the 8th, 2020. The call was initiated just based on on a question that I had asked about the debt tender offer, but then very kindly, many of the followers and my new friends on YouTube provided some additional questions. So I was able to ask some of those questions as well. So I want to walk you through it. There's nothing earth-shattering here, but at the very least, it should give you a reminder as to why you would want to be invested in OXY, or maybe why you want to avoid the stock. So let's take a look at the outcome of the call. So guys, the first thing I thought I would do is just take a look at the stock today. Now, obviously, by now I'm sure all of you know that OXY got whacked today, almost down 10%. It's sort of a confluence of a number of different events that happened. The market's down in general. The Saudis impacted the oil price in terms of their production and their pricing. And what's interesting to note is that even though it dropped nearly 10% in one day, it had a small little uptick at the end of the day, which is always interesting, right? So it's not like the decline continued. However, it is very interesting to take note of the fact that OXY dropped almost 10% on the same day. I had a call booked with the investor relations people, so maybe next time I won't book the call, I'll just surprise them or something like that, because who knows what will happen if I plan or book a call. Other than for this massive drop, as the market crashed due to oil prices and coronavirus into March of this year, many of these little peaks and valleys that you see within the stock price in terms of its movement represent moves of 4 or 5, even 10%. The outlier here is that that day, I think it was it might have been at the end of June or early in July, when OXY spiked about 30% when OPEC said they were going to cut production. But yeah, a 10% drop on one day is painful. Anyway, I thought I'll just get that out of the way before I go into the investor relation discussion. So the first thing we talked about is the debt tender offer, and this was kind of a quick update in terms of where we're at. In July, we know this from the Q2 earnings report. OXY raised about $2 billion in senior unsecured debt and completed a debt tender offer to retire about $2 billion of the 2021 debt maturities. There are, according to investor relations, a couple of new press releases about the debt tender offer on the website, so you could probably extract them there and take a look at them there. They are currently still tendering the 2021 and 2022 debt notes out, and they're hoping for good success from that point of view. The book runners include sort of all OXY's bankers right across the world. I think the objective there is to say if you leave one of them out, they might be upset. And the last Form 8K filing with the SEC, which was on August the 12th, for debt tenders, has an expiration date and time of midnight tomorrow. So that one's coming up real soon, but that looks pretty good. So we'll have to still see what happens with that in the future, because as of today, that's future dated as at tomorrow. A couple of people asked, or maybe to be fair, it was mostly Yidi, who follows me, who asked about Petroleum, the $4.5 billion asset sale. I asked about that. They said it's a press speculation story. The information was not provided by Occidental, and the dispositions are as at the Q2 earnings call, or otherwise as updated on August the 19th as it relates to the Orion mine disposition, which was valued at about $1.3 billion. So that's the news there. There is no new news other than what is officially available from Occidental. It's not unusual, by the way, when you have a call with people from investor relations to get a reply or an answer that is sort of built around the premise of no comment. But anyway, that's how it relates to the asset sale question. I asked about break-even, And to be fair, I knew, going into the discussion that this is a really tough question. It's not only a tough question because of the operating costs and the capital costs related to the wells, but it's also a tough question for Occidental as they integrate the assets that they acquired after the acquisition of Anadarko. However, what we do know for a fact is that Occidental has significantly reduced capital expenditure for the second half of 2020. They are currently spending most of their time not so much looking at break even, but rather working on the capital plan for 2021. The goal is to ensure a break even of less than $40 per barrel. I think it's fair to say we kind of all knew that, but in this particular instance, I'm hearing it from the horse's mouth, as it were. So that's kind of the objective. I know there's a lot of speculation out there that the current break-even is around $31, $32 or thereabouts. That might be true for Occidental's traditional owned assets, especially in the Permian Basin, but may not necessarily be true for the acquired assets from the Anadarko acquisition. The other question that I asked, I just threw this in for good measure and it relates to this answer over here. I said, it's fine to tell me that you are producing 1.3 to 1.4 million barrels of oil per day, but that's only really good news if you also have the ability to sell it. And the gentleman from Investor Relations said, midstream and marketing is responsible for marketing all the oil and gas. Obviously, midstream and marketing own a variety of different assets, including transportation and storage capacity, so pipelines and storage. So they have the ability to move the oil and gas, to store the oil and gas, and obviously get it onto ships, including ships that go to China, as I covered in one of my other videos very recently. So they're doing a good job in terms of moving the production, which is quite astronomical at around 1.3 to 1.4 million barrels per day. I asked about analysts. Surprise, surprise, Oxy cannot discuss analysts, so I didn't expect them to be able to tell me, hey, Joe is a good analyst and Bob isn't. But anyway, the answer was there are about 30 analysts that cover Oxy, and a few of them are quite good at estimating earnings. We can do a sort of paint by number to figure out who's the top three, and then we can find out who's going to be the closest and most consistent most of the time. I am not an analyst. I do my own homework and research, and as you can probably tell by now, I like doing this. But I'm not an analyst, and I'm also not offering financial advice. So I think what I will do, I will spend a little bit of time to see if I can identify the top three guys who appear to be the closest or most accurate in terms of their Occidental analysis. We talked about upside potential. My question was, what parts of Occidental are analysts ignoring that may have more upside potential than what they are giving it? So the answer to that is again quite interesting. It's not necessarily rocket science because some of these things you already know. We know from the earnings call in the second quarter that a change of $1 barrel in the price of oil generates approximately $200 million in cash annually. So that's of course great if oil is going up. It's less good if oil is going down. The good news is that for the third quarter, on average so far, oil has been trading at a much higher price than in Q2. So it's good news for Oxy from that point of view. The other thing that they mentioned, which I had pretty much not really paid much attention to at all, was the fact that, or is the fact that OxyChem it generates an incredible amount of free cash flow. It actually puts a lot of money in the cash register on a quarterly basis. In fact, the one gentleman said that for one quarter since the 90s, OxyChem didn't generate good revenue. And for the rest of all those quarters combined, so a period of covering about 30 years or so, it was a top cash flow generator. The other thing he mentioned, which I covered in my very most recent video, is low carbon ventures. This is a new initiative. Also learned a little bit of information from them. They shared with me that Carbon Engineering, the Canadian company, is owned by a consortium or a consortium of oil companies are invested in carbon engineering, including Occidental. So it's actually one of the owners. So they hold the licenses for the process and the technology, which means if anyone else wants to use it, Oxy would be earning revenue from this point of view. I have talked about DAC, direct air capture, and EOR before. If you don't know what it is, you can look it up, or otherwise you can ask in the comments and I'll answer. The other thing they mentioned is the process uses a lot of electricity, and electricity costs a lot of money. And Oxy has the ability to apply their natural gas resources to it, which will help to cut costs. So I took a quick look at OxyChem, and I looked at the third quarter and full year 2020 guidance estimates for OxyChem, and you can see here the third quarter 2020 pre-tax income is estimated at $145 million, and for the fiscal year, pre-tax income would be approximately $550 to $600 million. So that's a nice chunk of change generated by OxyChem, which previously I was literally paying absolutely no attention to at all. I asked about the marketing. So quite a number of you have said that Oxy is not doing a very good job in terms of getting the story out. So I asked, what plans do you have to advance or promote the stock? Now, this is not so much what they look to do in the future, but this is actually what they're doing right now. And I think maybe from an investor point of view, we could view this as being at least somewhat deficient. They are this is a two-legged stool. They attend conferences, and there's one coming up very shortly in New York, which is the Barclays Energy Conference, where Vicky Hollop will be presenting. And depending on the audience, they'll get different C-level execs presenting, like the CFO or whatever. And then they do roadshows. And I suggested, well, roadshows are usually for institutional investors, and they agreed. The investor relations team is responsible for these conference speakers and so on. So it appears to me that this is all, or perhaps might be the greatest extent of Oxy's marketing muscle. So there's a bit of a gap here because they have great stories to tell and they're not getting it out in the marketplace. I asked about catalysts. Is there anything that could drive the stock right now? First was the elevator pitch from investor relations. Most people know that Oxy has the best assets. I just need to take a sip of coffee. It's one of the best operators, especially in the Permian Basin, and it's a low-cost producer. Everybody knows that. But I want to know about the catalysts that might drive the stock higher. Now, interestingly enough, I got 2 pointers here. One is reduce the debt. I think we all know about that, and obviously the other one is somewhat expressed in hope because no one can predict where the commodity prices are going. So reduce the debt for me is an obvious one, and then the commodity prices obviously impacts the earnings and the ultimately the share price as well on a go-forward basis. So one is a strategy, the other one is more a little bit of hope. But we'll see what happens there. I have mentioned to a few people who asked me in the comments about the recent drop in WTI, and my standard reply is I see WTI going to 60 before it goes to 20. So my spidey senses there tells me that it's more likely to go higher as demand slowly increases, even if it is step by step, than what it is likely to go much lower. So I know it's in the high 30s right now, which means it's dropped quite a bit. I'm not too concerned about that. The high 30s is still okay. I just don't want to see it at $20 or thereabout. I talked a little bit about the cash flow priorities and just the planning in general. I specifically asked about our Uncle Warren's preferred shares. That's a longer term strategy, so they are not thinking of retiring those preferred shares right now. In fact, their focus is immediate in terms of the production base and debt reduction, and then medium term on the sustainable dividend and growth capital. So I mentioned Uncle Warren in the previous slide, and I also talked a little bit about the fact that Occidental is diluting shareholders by offering him common stock, Berkshire Hathaway, for their 8% coupon on a quarterly basis, and then of course Berkshire receives the common stock, and then they just immediately sell it, which is again a negative impact on the stock. So it's like a double whammy, right? So he gets common stock, he sells it right away, which is not good, and then in addition to that, it dilutes the shareholders. They said on the next board of directors meeting, which I think was October 10th or something like that, the board has not decided yet whether they would issue common stock again for Berkshire's coupon, or whether they would pay it in cash. So to me, reading between the lines, that's actually a slightly positive indication there, because the mere fact that you can actually have a discussion as to whether we should pay that coupon in cash or stock means that you actually have some cash on hand, and then you just need to figure out how to apply it. I'm going to end on this slide over here. Some good news. I was looking for any good news that I could find, and I looked for the Analyst Up or Downgrades for the period August-September, so sort of the last 6 weeks. There were there were 4 up or downgrades, and it just so happens that they were all upgrades. MKM just today actually upgraded OXY from neutral to buy with a price target of $17. And prior to that, in August, Morgan Stanley, Tudor Pickering, and JP Morgan Chase had all upgraded it in a variety of different ways. Morgan Stanley from underweight to equal weight, Tudor from sell to hold, and JP Morgan Chase from underweight to neutral. You can see the price targets here sort of in the mid to high teens. So on that little good news story, I'm going to wrap this up for today. I wrote down quite a few pages of notes, and I tried to consolidate it as best I could in a short presentation, and also wanted to get it out to you guys as quickly as I possibly could. So hope you enjoyed the presentation, and if you have any questions or comments related to this, feel free to comment. As you know by now, I will take time to respond to your comments as appropriate. So this is Rudy for Bester Investor, or Mr. Roxy, signing off. Thank you for watching. Thank you for spending time with me, and I will see you soon. Bye-bye.